Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, we've seen a little bit of a pullback, a little bit of a consolidation possibly in the precious metals moves here, where gold is slightly under 1800. It was down to about 1780 just yesterday, but has nicely rebounded off of there. Still, taking into at least short-term context, the gold price has rallied well over $200 in a short period of time. Silver touched its head above $23, then pulled back a little bit, but is currently, right now, as we're recording this, right at $22.88. One thing to consider, too, is that the rally in the metals has gone hand in hand with a rally in a lot of other markets, including the broad averages. It seems now that we're in either a consolidation phase or, quite frankly, maybe it's rolling back over. Who knows? Only time will tell. What do you take away from the rally, and now even more so just in the last couple of days, a bit of a pullback from some of those higher levels?
Well, Corey, I think it's to be expected because you had these obvious resistance levels. If you're looking at gold, silver, and the gold stocks as well, GDX and GDXJ had these really strong, obvious resistance levels of around 30 for GDX and 37 for GDXJ. And then you look at gold, essentially rallied up to the 200 and the 400 day moving averages there in the 1805, 1810 range. I mean, silver went above 22, which was nice, but it did get basically caught by the 400-day moving average, just a little bit above that. So we've seen a hard reversal in precious metals, but it's to be expected for a variety of reasons. The advanced decline line, oddly enough, which was quite strong a couple months ago or a month or two ago, that didn't really do all that much during this rebound. So you look at that, you look at the fact that this rally it basically went hand in hand with the stock market rallying. So I think looking at these factors, it was predictable that precious metals would hit these resistance levels and then sell off. And so now comes the real interesting part, because we'll see over the next month or two if precious metals are able to decouple, and if this rally in the stock market really peters out, or maybe it takes longer for the rally in the stock market to peter out. Yeah, but in any case, I think for precious metals to really make the next leg higher, that you're going to need to see the market potentially discount a recession, and you see the S&P trending towards 3,500 again. Because if you get that happening, then the market knows the rate hikes are done and they're going to have to ease at some point. And so that to me is the real question now, because I don't think we know, like, we've been doing these interviews for years and years, and we know that from where we are right now, if the stock market were to, like, let's just say in theory it could continue to rebound and get closer to the high. We know that precious metals are not going to go that much higher if that happens. So we're coming to some very interesting points here. But technically, yeah, I think we're probably going to correct and consolidate here in precious metals. I'm not worried about precious metals rolling over and making a new low. I don't see that happening. I do think the bottom is in. We're close enough to the end of the hiking cycle. Real interest rates made this huge move higher, and so they're starting to back off a little bit. So I do think the worst is over, but that's why we're in an interesting period here, because if precious metals correct and consolidate for a month or two, that the sentiment could remain kind of muted. People are not that optimistic, and that could change if we get a real leg higher. But it doesn't, a real leg higher, that doesn't look like it's going to be imminent here in the next couple of weeks. I could be wrong, but that's how I see it. We have a lot of different factors here that we have to watch over the next month or two.
Well, Jordan, there is a lot going on. It is end of the year book squaring for some people. There's still that potential for tax loss selling, I guess, in the mining stocks. But just in general, when I look at the environment we were in a couple months ago, and there was calls for 1500, 1400, even 1375 to get retested again in gold, when gold broke that 1675 key support level, those calls have all but been silenced. And we've seen gold get past that 1780 resistance everybody wanted to see and shoot up to 1815 and even higher than that. So that seemed encouraging. And with silver, again, same thing. People were talking $16, $14 silver, but it reversed that 1741, got up through 19 and 20, and even got up through 2141, that key resistance level, which was prior support. And people still said, yeah, but we got to see 22. Well, silver delivered on 22 and then some, and it closed last week at 23.25. Is that not somewhat encouraging to close the week in silver above not just 22, but above 23, and for gold to have broken the $1,800 ceiling again? I just don't see that much excitement in the sector, but aren't those key levels to have crossed?
Yeah, I mean, it's a good sign that we were able to cross those levels, but I mean, we could easily, like if you look at support in gold, I think I wrote an article, but I think I mentioned for gold, we're looking at, I want to say like 1740 or somewhere in there. That's one level. I mean, gold could come back down and, maybe test the upper 1600s. Yeah, that's possible. And same thing with silver. Silver could come. I mean, in theory, we could retrace a big chunk of this rally in the miners and in the metals, but not necessarily the whole thing. So I think getting up to these levels is important, but that doesn't mean that, okay, well, gold's above 1800 and silver's above 22. It's going to hold above 22 indefinitely. I wouldn't make the mistake of saying like, okay, they're in position to continue this move like immediately in the coming days and weeks. I'm just saying, even if precious metals back off here and consolidate for a couple months, I mean, that would not take away from the good rebound that we've had and the positive macro developments that may be lurking behind the scenes with respect to real interest rates likely having already peaked, and at the same time the Fed likely near the end of its hiking. I mean, you look at the bond market, that's seen a very significant turn, so that's going to help precious metals. I mean, looking at the 10-year now, the 10-year is back below 350, and these curves are badly inverted, so I think the market knows what's coming. But again, precious metals have to detach from the stock market. And so I think that you could have some kind of a transition where they kind of separate and, detach from each other. It's hard to just think that that's just suddenly going to happen and precious metals won't correct that much and they're just going to keep moving up while the stock market just suddenly drops.
So, Jordan, is what you're saying here that we need to focus a little less on price, as long as price doesn't go crashing back down, and more on time, because this correction has taken so long from, let's say, 2020 or even the peak earlier on this year, is that almost time is more important for prices to stay around these levels and not go test the lows to build up that base?
Yeah, it's very possible. I mean, it's hard to say because we don't know if we're just presuming that the bottom is in and there's going to be another big leg higher. We don't know if it's going to take 1 or 2 months of consolidation or, 3, 4, or even 5 months of consolidation. So it could be important. I mean, it would be if we do see a consolidation here and, it gets kind of boring after a couple of months. But while that's going on in precious metals, you have the stock market trending lower and really underperforming, and you have concerns about recession because, the coming recession and, all the macro that comes with it. If you look at during a bear market, when the stock market performs the worst, it's when the market basically starts discounting the recession. Now, granted, this is only known after the fact because I've seen a couple charts like this where they show, okay, here's the recession starting at, day 0. How does the market perform, 30 days before that, 30 days after? And the market basically, it performs its worst in most cases over the last 70 years from like a month before the recession actually starts to like 1 to 2 months after. So that 3-month period is when the stock market performs the worst. And again, we don't know that until after the fact. Like, it's not going to be obvious till a year later when it's like, oh, well, that's when the NBER declared the recession, and that's when the stock market performed the worst. But I mean, if we're thinking about that and we say, let's say the recession is going to start in the second quarter, then you might get, the market really starts to fall apart in, March, April, May, that period. And, when that happens, the market's going to discount, obviously, rate cuts. And, that's when you could get the huge divergence where precious metals start to really outperform and, the stock market's rolling over. So that to me is the important macro backdrop. And maybe that's 3 or 4 months away. And in that case, then yes, precious metals would have to consolidate into the first quarter and maybe into the second quarter. So, I mean, even if they have to consolidate for 2, 3, 4 months, that wouldn't really change my view that we've put in a major bottom, and that, we're setting up for a big leg higher, but it just doesn't look imminent right now.
Well, Jordan, we see a lot of people posting charts on Twitter, posting them to YouTube, posting them on other chat forums, even our own forum. And a lot of people are looking at a ton of different factors, trend lines that have been broken, gold silver ratio encouraging signs, looking at moving averages where silver or gold or some of the mining stocks have crossed up through them. Some of it can also become overwhelming for investors because there's so many people with so many opinions. How do you separate the signal from all the noise when you're looking at charts? What are the key moving averages or trend lines or things that would tell you we've got an all clear for higher prices?
That's a really good question. I think obviously looking at price, the one thing with moving averages is, I would look at the 200 and the 400 day. And as I said at the beginning of our interview, I mean, those levels provided key resistance. And what's difficult about, breaking those moving averages is, the market could break above it in one day. But I mean, it really takes time to know, is this a real breakthrough, or, is the market going to correct more and come back under the moving average? It's just, that can take a couple months to really know. There's other things to look at, like breadth indicators are really important. The GDX advanced decline line has been an important tell over the last 3 months. It was a couple months ago, it was really bullish. Now it's kind of telling us, this move is probably petered out for the time being. So I think looking at breadth indicators and knowing how to read those are really important. At the same time, I think intermarket analysis is extremely important for precious metals, and especially at turning points, like kind of where we are now, because certain things are going to happen in the market and the economy for this bull market to really, begin, this new bull market to really begin in earnest. So you have to carefully watch what's going on in all these different markets to try and get a sense of, where precious metals could be going in the short and medium term. But I really come back to intermarket analysis in the, those macro factors, and one of those things is gold against the S&P 500. I mean, that ratio has kind of basically been range bound for about 9 months. And so that's something to watch. I mean, if everything sells off here, but slowly but surely that moving average kind of moves towards the upper end of its range, that would be significant for precious metals. That's something I'm watching. So yeah, I mean, I would say the advanced decline line, breadth indicators, gold against the S&P 500, those are things that I'm watching. Silver outperforming gold is really significant, and it'll be interesting to see if that continues, because the macro situation that I'm talking about, which is really bullish for precious metals, that's more bullish for gold than silver. So I'm not necessarily sure if silver is going to continue to, maintain that outperformance, or if that outperformance could take a big hit before the beginning of the next leg higher. So I know that there isn't a direct answer, but it really, it depends where we are in the market. But for me right now, those are the important things to watch. Gold against the S&P. You could say GDX against the S&P, the advanced decline line, breadth indicators. Those are the things that I'm watching right now. And, those things will obviously change as the market changes. And, if the market gets ready to make a real leg higher, you're going to sniff that out in the gold to S&P or GDX to S&P ratio or the advanced decline line.
All right, Jordan, we'll wrap it up here. Thanks as always for your coverage. Sounds like, well, there's still a lot of work to do for the metals. It's been very encouraging, the recent rally. But I think it's been encouraging for a lot of investors because they've finally gotten a little bump at the tail end of this year. Man, next year is going to be pretty important. Jordan, thank you as always for your time, man. We'll chat next week. Have a great rest of your week.